welcome you watching the Small and Mid Cap Show. I'm Mahima Vachrajani and with me is Puneet Javeri joining in. Well, today on the Small and Mid Cap Show, we're going to speak to two very interesting managements. First one is Sona Comstar, and we're joined by Mr. Vivek Vikram Singh, MD and Group CEO of Sona Comstar, who joins us now. Welcome to the show, Mr. Singh. My first question to you is that, how is the overall demand outlook, in the EV space? There are some kind of pressures that we're seeing in Europe, and Indian demand, EV demand is also seeing a bit of an offtake. So give us some color as to how the demand outlook is.
Sure. So thank you for having me. We've had a fairly good quarter. We've grown 22% in revenue and 27% in profit. We let our numbers speak for themselves because, demand's never going to be in the range of growth we have. We have 20 to 30% growth usually in every year. But the industry, of course, does not grow at those rates. It has not been for a while. I think that will continue. But if you want to look at EV specifically, if you add battery electric vehicles and plug-in hybrid, for the first 5 months of the year, they grew by 25% year on year. So it's not a bad growth rate for the EV segment, at least. Hybrids, which is also a large segment of revenue for us, 21% of our revenue comes from hybrids. Hybrids grew by 16% in the world. So both are positive for us. And we're a global player. So I think a lot of the reporting that you're hearing may be more India specific. India is not a very large part of our EV revenue. 33% of our revenue is EV, out of which I would say 9% would be from India and 24% would be from outside it. And you're right, India EV two-wheeler has been not growing very fast for the last, I would say, year and a half. And I think policy and demand, all kinds of reasons. But like I said, we are well insulated. So industry cautious growth, while Sona continues to grow, kind of remains the headline.
Hi, Mr. Singh. Thank you so much for joining us today. Before I take the larger point that you're mentioning on, the EV demand not, keeping pace, I just wanted to first get the new order that you've received in this particular quarter, specifically on sensors and the software business. Now, this is the first such order win in this particular segment, and we've seen that once you get an order into a segment, it doesn't stop there. So I just wanted to talk us through the particular opportunity in this space. Now, we see that this is specifically for the electric passenger vehicle space. Can this also be, used in other segments as well? And just wanted to talk us through, I think the current orders of around 150 odd crores, just the product and the opportunity in itself.
No, you brought out a very good point. It's a great question because, frankly, in an industry that's not growing by much, how have we managed to grow in the last 3 years our profit by more than 2.5 times? Of course, the reason is that we keep increasing our market share in existing products and we keep introducing new products and new market segments. This, you're right, the sensors and software space is something we had never done before. This is a beginning. It's a great beginning. And also you're correct that sensors and software are used in every kind of vehicle. Frankly, forget vehicle. Everything that moves and has intelligence would require sensing, and hence it would require sensors. And it would require software to process that input gathered by the sensors to make intelligent decisions. It is a vast field. An automotive vehicle today, let's say a passenger car at the higher end, has about 100 million lines of code. There is a lot to do, and the opportunity set is just vast. So hopefully the first of many, many more wins to come. 5 years ago, we used to be a mechanical company. Then we became an electromechanical company with motors. Then we became a electromechanical electronics company, and now electromechanical electronic sensors and software company. By growing our scope and the level of abstraction we are at is how we have managed to keep growing, even if the industry doesn't grow by much. So thank you for bringing that up. That is actually a very salient point.
Right, right. Mr. Singh, so, considering, all of these things that you just said, I want to understand that, you've recently also raised 24 billion approximately, and you said that you're looking for inorganic expansions as well. So, then which of these segments will you be looking to expand in, first thing? And are there any recent updates with respect to these expansions, if you can give us some color?
Yeah, so we have not raised any money yet.
Okay.
We have an enabling resolution that allows us to raise up to 24 billion rupees. We will see how much we raise depending on where we are with the opportunities we are pursuing. You're right, we have multiple opportunities we are pursuing in all spaces that we are in the sensors software, in the driveline space, in the motor space, plus a couple of new spaces within the broader mobility technology area. We have done two acquisitions in the last 5 years. Comstar we bought to get into motors, and Novelic to get into sensors and software. Our acquisition strategy is fairly well laid out and clear. We always evaluate buy versus build. If we can build ourselves and in good time, we always do it ourselves. It is the most inexpensive and most profitable way to grow. Only if we don't think we can have the capability or it would take far too long do we go and buy, and that has to bring technology ownership to us, right? And the objective that if whatever we buy, it has to tick some boxes. It has to be a product or technology that will be in mobility for the next 15 years. It has to be something in which we can be in the top five in the world while doing it. Number three, we should be able to make good money while doing it. So single digit margin EBITDA businesses are not for us. Single digit return businesses are not for us. And fourth, slightly idealistic point, but it should be good for the world. So we will not get into things that harm humanity. We will not make weapons. So defense is kind of ruled out. We will not do any things that we think are not good for the progress of humanity. So that's the framework. That's the framework we want to stick to, and stick to mobility technology as the area that we play in. That's all I can say, because deals, they're not done till they're done. Anything to say beforehand would be not right.
Now, Mr. Singh, valid point there that you mentioned about the detailed strategy on acquisitions. It's worked very well for you also in the past, and we've seen that a lot of your R&D is also sometimes in divisions that might not pan out, completely new surprises as well. But I just wanted to get to the larger point that you mentioned on the FAME 3 delays, and we've not seen too much picking up for the electric two-wheeler space, and we've seen demand also slightly subdued in the first quarter because of that, as per Vahan data. How are you seeing, like a reaction to this particular space? We have seen that you're present in electric three-wheelers as a focus area. Electric LCVs also we've seen picking up from the OEMs. The larger ones have already launched that, and e-buses is something that's going on for some time and now has seen a lot of pickup. Specifically for Sona Comstar, how big is the opportunity across these three segments that I just mentioned? Are you already supplying products to this division? And if you could just specifically comment on e-axle as well as a product category, because that's going to be the next big thing. Just wanted your thoughts on that, sir.
Excellent question. Do not call me sir. I'm just 45, man. And yeah, I must compliment your research. You guys have good quality of questions. I think your research guys deserve a raise. Uh, so yeah, EV three-wheelers are doing extremely well. You're right. The economics just make sense. With or without subsidy, that space will do well. I think all sorts of electric commercial vehicle under 7 tons should electrify and electrify fast, because the problem they're trying to solve is how many kilograms of freight they can transport into the kilometers transported upon the rupees taken to transport it. I think electrification solves that very well, and the total cost of doing that is much lower. So I think that's going to be a huge set. Electric buses make imminent sense again because they also have a higher runtime. I think electric two-wheelers is the one that has disappointed us. I think the potential was much higher, but that's not gone very far. And if at these prices also it's not doing that well, maybe there is a demand issue at the consumer level, which is something companies can't solve, right? But the size of the opportunity, as you rightly said, is so much higher in the bigger vehicle, because the bigger the vehicle, the higher the torque, the bigger the motor, the higher the price. So the higher end of the market is where the true value is for ancillary people like us, and it's huge. I don't want to put it's in so many, it's in multiple billions of dollars. So even if we get a fraction of it, we will be well placed. As you know, in the traction motor market, we are the leading company in India that does it independently. So if we maintain that market share also, we are talking about many times growth in the next 10 years. It is an exciting space.
Uh, Thanks for that. So now, just Mr. Singh, I just had one question, which is something that I came across on your mobility and industry business. You have mentioned that you're enhancing your semiconductor chip design business. Now, I'm not sure if there's a lot that's out there that you can give us today on it, but it's a very interesting space, and combining it with mobility, of course. If you could just talk us through something that you could give some details on it, what is the current progress, and where do you see that as an opportunity?
Sure. So yeah, I mean, it is one of our smallest businesses. It's about 1.5% of our revenue today. So it is a very small seed that we have sown. Uh, we we hope and we will try our best to nurture it, water it, and ensure it grows into a magnificent tree one day. But the idea is this, right? The same idea that I told you, that if there are 100 lines of code in a vehicle, it needs a lot of chips to process that data and take decisions. So both logic, memory, all sorts of integrated circuits are required, which is what chips are. These chips, the heavy lifting is shifting from what used to be just the laying of the circuit on the chip to the software that controls that chip. And I think there is a lot of work that will come up in the next 10, 15 years. It is a space of the future. And if you understand the application of that circuit, I think you have a good play. Today, it's a small thing that we do for some of the bigger chip makers in the world, but I think there is a lot of growth area. So can't say too much because these are one of those, right? Like if you had asked me in 2016, sir, how much would your electric vehicle differential assembly business become? I don't think I would have been able to answer that. Yeah, it will become like 33% of our revenue. In 2016, it was 0 point something. So it is one of those things. It's a sunrise area. It has immense potential. We will continue to be this kind of company, right? That we will continue to keep finding newer areas that make us bigger 10 years later. Because today, as management, whatever we do is for 4 or 5 years later. What I do today is not going to change much about this year's results or next quarter. Another reason we don't give guidance is this: we want to be, have been, and will remain focused on the medium to long term. That's who we are.
I think so. For guidance specifically, Mr. Singh, of course, you mentioned that you don't give, but the big order book, 7 times this current revenue, does give a picture of where the company is headed. Now, just one final question, sir. Of course, you've spoken previously on the company's focus on battery electric vehicles, 79% of its order book coming from this space also. But I just wanted to get one question in, if I can, on US, and specifically, my colleague highlighted that Europe, we've seen some 300 basis point impact in this quarter. In US, we are going to see some new emission norms coming in from 2027, which are going to be some long term for 5 years post that. How are you seeing the geographic play going forward, maybe in the longer term, as you mentioned that you think in the longer term only, but for Europe specifically, we are seeing other component makers also suffer a bit, and the picture doesn't look very pretty in the next 12 to 18 months. But could you just quantify something on both these regions and also on emission norms new coming in US later on in a couple of years?
Yeah, in just general terms, emission norms will continue to become more and more stringent. It is a fact of life. We cannot live in a world which is racked by climate change. And I mean, we live in cities which are getting flooded, the temperatures going above 50 degrees. Of course, something needs to be done. So that is a given. With that will come some disruptions at some points, but we are well placed for it. If you look at how we designed our business, our largest segment is EV, 33. Next, actually, hybrid is 21%. So we are already above, far, far ahead of what emission norms are forcing automakers to do. So any change in that direction is basically positive for us. So I won't worry about that. Europe is a very interesting question. I think structurally, if you look at it, Europe number of vehicles sold will be lower. It is not something that's going to keep going up. Now, if that is a fact, what do you do? So our strategy is that we will try to get into more and more products and increase the revenue we obtain from each vehicle. And for that is the area we have chosen is the sensors and software area. That even if lesser number of vehicles are sold, can I extract more value? That's the thought process, because you are right. If you anybody's strategy today is that I make X and I sell it to Europe, and this is my market share, and it will continue to grow. Boy, they're in for a tough time. I mean, it is a number that's only going to go down. America is stable, and looking at how America is geographically and the society and how driving is seen, I don't think for this decade at least we need to worry that much about overall demand. So America will continue for the medium to long term be our largest market, followed by India, followed by Europe, and followed by Asia in that order.
Well, Mrs. Singh, thank you so much for giving us those answers pretty comprehensively and taking our time and speaking with us at NDTV Profit.